issue, and what should you as a consumer be aware of. And then the final area is, as always, as a critical part of our role is we will give advice within government on developing the policy and legislative framework. So that's what we will be doing for the next 3 years.
Thank you, David. Right, I'll now move to Simon. Simon, as we move further into recovery, what sort of attitude to risk do you think lenders are taking? And do you think lending is going to flow more freely, or are we at the point that we should be in terms of borrowing?
I guess I'll need to start by saying you say we're moving into recovery, and
you dispute that.
I guess if our group economist was here, he would say, yeah, a sort of a long, slow recovery. But I think what he always says is that the error bars on our projections are large, and I think that is bound to govern what banks and other lenders and their attitude towards risk. I think one of the things that as an organisation we are looking at is being more articulate about our risk appetite. I think we've been forced to do that by our regulators to a certain extent, and you know, I think so far that certainly in the area of consumer credit that we operate in, very much sort of the prime sector, that I guess last year was quite a good year in terms of arrears levels, and nowhere near. I think Joanna said that things perhaps weren't quite as bad as they had been expecting, and I think that's certainly true from our perspective, in that our arrears levels were very much lower than we had anticipated at the end of the year. That actually made budgeting for this year quite difficult, because when you sit as a risk director saying, well, you know, I know our arrears levels hardly moved last year. In fact, they went down, but next year we think they might go up quite a bit, and you get that sort of knowing look from your planning guys in finance. But I think, you know, once again, going back to our group economist, he would say that he didn't get it wrong last year in where we were going to be. He said it was just, certainly in terms of where, but it was just the timing, and that may well come through at a later point. I think, of course, also that most lenders have put into place forbearance programs, and which have been running now for a year, 18 months. Of course, forbearance programs at an individual, a micro level, come to an end at some point when it's obvious that a person cannot continue within those. So whilst there have been a number of successes with the forbearance, clearly it's putting off the inevitable for some customers. And so we'll start to get sort of back to a sort of a steady state where the forbearance isn't slowing down the arrears levels. In terms of where lending is going to be, quite a difficult one really. There are so many other factors for the large lenders. You know, all the new capital rules, all the new liquidity rules. You know, funding is an issue for us all. You know, the SLS and other government support is starting to wind out. So that's causing organisations such as ours to look at the shape and size of our balance sheets, both on the asset and the liability side, which is going to drive the amount we want to lend. But whether it's just the supply of borrowing that's the issue, or whether it's the demand for issue, because you know, I think certainly this, you know, since 2007 the supply of credit's gone down, but I think to a certain extent the demand's gone down as well, as because you know, organisations are looking at their balance sheet, whether they be financial organisations or just other corporates. You know, we see to a certain extent our balance sheet is being supported by corporates deleveraging, and I think also those individuals that can are also deleveraging as well, and that is affecting the overall appetite and the overall lending numbers that we're seeing, which are certainly subdued to where they were a number of years ago. Whether they ever get back to those levels, we shall see. But I think it's slowly and gently here on in for most lenders.
Sure. Thank you. Ivan, I just wondered what you see as the key challenges for debt purchasers, and what your perspective is from the kind of consumers that you're talking to at the moment in terms of how they're coping.
Sure. Well, I guess really, and it's not a cliche when I say our challenges are our opportunities, I'll mention three things really. First of all, from a debt purchasing perspective, it's about building the relationships with the sellers, the UK banks. so that we're not dealing on a vendor-supplier type relationship, which actually doesn't nurture long-term relationships and repeat sales, because let's face it, there will be future business that they wish to sell. It's about understanding on both sides what they have to sell and opening up the data so that we can understand it to make a true and fair evaluation of what we want to buy. So one of the biggest challenges is to get the sellers to think more about relationship, get thinking about transparency and opening up data so that we can make if you like, a decision on what to buy with full and open understanding of what it is we're actually buying. That's number one. Then from a collections perspective, which is the other side of our opportunity, that's fed by the first challenge. The more we know about the business that we're buying, the more effective we can be about collecting on it and applying the right treatments, the right approaches. And I look at this in a similar way to I look at in my previous lives as a marketing organisation. The more data we have and the more segmented approach that we take to collecting, the more efficient we can be. And that leads on to the third challenge. That's getting customers to almost kind of replicate the challenge we have in number one, build a relationship with us. We take a very much customer-driven approach to collecting, and we have to. We have a different operating and a different financial model to the primary initial lender, so we can look at this over a longer-term view. But the biggest challenge is to ensure that the customer talks to us, lets us know what their challenges are. We have a full, clear understanding of their financial position, simply as if we have a clear understanding of what we're looking to buy, so that we can manage the relationship on an ongoing basis with them, to help them repay their debt, to help them rebuild their credit history, and help educate them on what they perhaps didn't learn the first time round, which put them in this situation in the first place. So it's those three things. And it really is having a good understanding of the data, analysing that so you go into things with your eyes open, making sure that we apply the right processes, and then build long-term relationships, because it costs money every time a customer stops paying us and we don't know about it. So better build a stronger relationship so that customer calls us and says, I've got a problem this month, I can't pay you, and then we can work something out with them in a way that allows them to effectively repay in a way that they can afford. They're the challenges we have.
Okay, and finally, Claire, I mean, enforcement is still awaiting sweeping legislative reform, has been for some time and probably will continue to. How do you feel recession and recovery are affecting your section of the industry? I mean, you really see you're at the coalface, really, when it comes to debtors and their issues.
Yes, well, I suppose we are one area of the credit industry that do actually meet the public in their homes and businesses, which I think is a very important insight into certainly the enforcement debate, because we are seeing people struggling, of course. We're also seeing people who are not struggling but are indicating that they are to their creditors. And so, enforcement officers have an opportunity to diversify their official duties. Certainly that's what we're doing in our organisation, to be the eyes and ears of responsible creditors and to find out what really is happening, both in the debtor's business workplace, trading address, but also in their home. And that gives us a good insight, I think, into sort of, the way that people cope with their debt problem, whether it be a single judgment against them or more than that. And, we do see, as enforcement officers, some shocking poverty. I mean, it is shocking. Homes with, no carpet. We visited a family, a woman not too long ago whose tap in the kitchen constantly ran because she couldn't afford a plumber. It just ran and ran and ran. And she was asking the officer if he could turn the water off. This is the sort of anecdote that I suppose you don't always envisage enforcement officers dealing with, but this is the sort of thing that I've said for many years enforcement officers do deal with, and deal with it very well in terms of how they handle truly vulnerable people. But in terms of what is happening to the enforcement industry, there's no doubt that judgment debts levels have declined. I think I saw one report recently that they were down to 1999 levels. It was quite low. You know, and so we are constantly asking what is the reason for that. We have seen county court enforcement levels drop by 50%. That doesn't affect our business, but it's an indicator to us that creditors are enforcing differently or pursuing post-judgment remedies differently, which I actually think is to be welcomed. I mean, certainly if you use High Court enforcement officers, which you won't for regulated debt because of the anomaly in the court rules, but if you do use enforcement officers in the High Court, I mean, we do attend, and where people have goods which are needed to pay the debt, if an agreement and an offer can't be reached, we will remove them. And again, I've heard politicians think, and policy officials, think that it's shocking that goods have to be removed to pay the debt. But what everybody forgets, perhaps not this audience, but some commentators, is that is the law. And until the law is changed, that is what creditors are able to do, where they can access enforcement officers who have the skill to be able to do that without causing great distress to the public. And that is something that I am interested in as a debate. And certainly the MOJ are starting, or have been since last year before, to pick up the ball on the enforcement debate, because we want the Tribunals Court and Enforcement Act to be enacted. We want enforcement officers to be regulated to a level with a regulator who has teeth. And I have argued for a long time for the Security Industry Authority to be the enforcement officer's regulator. And I continue to work for that because I want enforcement officers on the street to work within a framework which is consistent, so that when the public meet an enforcement officer, we're all clear about what the various rules are, what the fees will be, what the powers the enforcement officer has, and there is no ambiguity. And we continue to work for that.
Fantastic. Thank you, Claire. Right, I'd now like to open the debate up to the floor. There are 2 microphones, and if you can wait for a microphone to come to you, that would be great, because then we capture it properly. Can you please tell us your name, your company, and who you're addressing the question to? I won't get everyone on the panel to answer every question, because otherwise we won't get through so many, but there's one question over there at the back to start with.
Hi, it's Oliver Larholt from Marshall Hall's Bailiffs. What does the panel think the OFT should do about the irritant of debt management companies, often selling false hope, extracting fees, and frustrating the legitimate debt collection process, forcing us to play a procedural dance, which usually ends up costing the consumer more?
Thank you. David, is that one you feel? Okay.
Yes. Could you just run that by me just a bit slower? The irritant of companies doing what? I just want to make sure I got this question clear in my own mind.
There are a plethora of debt management companies springing up who we have to deal with, who often offer ludicrous settlement terms of the sheer number of £1 checks we have to process. And this really seems to be going, in my opinion, largely unnoticed by the regulatory authorities. Okay, well, I mean, I suppose the first point to make is that debt management is an area that we've been quite active in. You seem to be suggesting that active though we have been, there is something that we're missing. And if there is, then I, for one, am not familiar with it, and I'd like to know more. But as you know, at least I hope you know, we've done the compliance review. We issued warnings to a very high proportion of the companies in that particular sector. A lot of those companies subsequently have surrendered their consumer credit licenses, in excess of 40. And there are still many, many companies in that sector that we're either A, actively taking action against, revocation action, or we're looking further into their business practices. And as you know, another part of our role, important part of our role, is